Thank you for having me, Mario.
You're welcome. So, I mean, today, the day we're talking is Wednesday, January 14th, and we've seen silver trade up to 92.28. I mean, uh, two years ago, if someone had told me that, yeah, I would have been, I wouldn't have been shocked, but I would have been like kind of surprised because for so many years we've been. Kind of under the thumb of the bullion banks and all the manipulation. So let's start with that and how you see things at the moment.
Yeah, the action in silver over the last 3, 4 months, the move, up to hit 50 through 60, 70, 80, 90. Uh, that move shows that the suppression scheme is failing. And the reason it's failing is because COMEX is primarily a paper market, yet the cash markets around the world are all trading much higher than COMEX. So you've got to ask yourself, what's the real price? Is the real price determined by paper contracts, or is the real price determined on exchanges that are cash and carry? I mean, COMEX last night in China closed, I'm sorry, silver in China closed at 91.50. That's $10 over US prices. So what's the price? Is it 101 or is it 91? It's clear that the paper scheme is failing.
Yeah, and what do you think it means for the greater system, the whole monetary financial system that the paper scheme, not just in silver but in gold, is failing? Because a lot of people out there don't think silver nor gold are important, but I personally think they are at the heart of the system. So maybe you could elaborate on that for the viewers.
Yeah, for those that think gold and silver are not important, I would just say, just watch. You're going to find out. Uh, in my opinion, silver will fail to deliver probably in the March, April timeframe. When I say fail to deliver, I think they're going to go force majeure and they will deliver cash instead of silver. And what that tells you is that the contracts are worthless because uh, if you can't perform. And my past partner, Jim Sinclair, used to always ask the question, what is a contract worth if it cannot perform? And the answer to that is zero. Uh, People need to understand that when silver fails to deliver, that is going to set off the derivatives complex, the what Warren Buffett calls weapons of mass financial destruction. They're going to blow up because confidence, trust is going to break. As soon as silver goes failure to deliver, gold will follow. And when you have contracts that are not performing, then you're going to have traders asking, well, what's next? Is wheat next? Is nickel? Is copper? Is oil? You name it. And understand that the derivatives complex is probably at least 4 times the size of all the assets on planet Earth. So it's truly the tail wagging the dog. Everything was financialized, and that whole thing is going to unwind. And when we could talk about the unwinding, uh, if you want, regarding the Japanese carry trade. That's unwinding before our eyes.
Yeah, I mean, I've covered the carry trade, Japanese carry yen carry trade on the channel. I even have a playlist for it, and I used to work as a government bond market futures and options broker, so I'm aware of that. And you mentioned derivatives, and to tell the viewers, I think what Bill means by unleashing like mayhem in the derivatives market, it's not just gold and silver derivatives, but interest rates derivatives. That's like makes up two-thirds of all the derivatives. And the notional amount, we don't even know what it is, Bill. It's probably over a quadrillion or 1,000 trillion. And yes, I saw the last few days, Japanese government bond yields have spiked massively. We're seeing that the Japanese prime minister has called for a snap election, general election, and also seeing that the yen is weakening quite a bit. So yeah, maybe you could tell us how you think that's going to impact the rest of the markets because Japan is really important, providing liquidity for all the risk assets, right?
Yeah, understand that the carry trade started because rates had basically been zeroed out in Japan. Rates were much, much lower than the rest of the world. So what they did was they borrowed in yen at yen interest rates. And when they pay back, they're going to have to turn around and buy dollars to do that. But the higher interest rates, I mean, rates had gotten down to basically a quarter of a percent on the 10 year and maybe a little bit higher on the 30 year. Those rates now of 30 years, 350. I'm sorry, not a 30 year, that's a 10 year, I believe. Um, what that's doing is it's squeezing the borrowers and it's making it harder to carry. And then the yen dollar relationship is making it harder to pay back. So that capital that was borrowed by the carry trade went into bonds, went into stocks, went into assets basically, and supported them. As far as gold and silver are concerned, some of that carry trade money has been used to suppress the price of gold and silver on the paper markets. So understand that once the carry trade busts, then the bid under traditional assets, stocks and bonds, is going to it will falter. And the way they have to close the position out there is to sell. The way they have to close the positions out in gold and silver, they have to buy because they've already sold. So that is impetus for much, much higher prices. And only the Lord knows where things are going to settle out once the dust from the paper markets burning up clears.
Yeah, and how do you think the de-dollarization narrative, or not narrative, but it's actually happening? I saw that not Chinese treasury holdings, for example, it's dropped from about a trillion about 3 years ago to now just under 700 billion. How do you think that's affecting gold as well? And also, what do you think of U.S. foreign policy? I mean, it doesn't seem to change despite the new administration. They seem to be alienating the rest of the world, and I don't think that's going to help people stop de-dollarization.
Right. The U.S., in order to keep the doors open on a day-to-day basis, has to borrow. We spend more. I mean, the debt is rising now by what, $5 or $6 billion every day. And the world de-dollarizing, meaning no longer participating in U.S. Treasury auctions, means there's less buyers. Who's going to buy the treasuries that the U.S. Treasury must sell in order to fund day-to-day operations? And the answer to that, ultimately, the buyer of last and only resort is going to be the Federal Reserve. That is, by definition, monetization. And all you have to do is look at what has happened throughout history whenever a government monetizes, their currency blows up. The problem with the dollar blowing up is that it's the world's reserve currency. Central banks all over the world hold U.S. Treasuries on their books, and that has been a core asset. Um, the the fact that foreign central banks and treasuries are turning away from U.S. Treasuries and buying gold tells you they see an event coming with the U.S. Treasury market, some type of credit crisis, and they're unloading gold because they want that to offset the losses that they see that they're going to take in the Treasury side.
Yeah, no, I agree. And I was looking today on X, and there's a post by Gary Bohm. I don't know if you know him. He's the
No,
founder and host of Metals and Miners. And he said the following: the final and most terrifying effect of the silver shortage, so we're switching over to silver a little bit, will be the great lockout as governments and corporations realize that silver is not just a monetary metal, but a strategic one. They will move to secure their own supplies at any cost. They will buy mines, they will nationalize production, and they will shut down the retail market completely. The day is coming when the average investor will no longer be able to buy physical silver at any price. Do you think that's a little bit exaggerated, or do you agree with that?
no, I agree with it. That's not an exaggeration.
Yeah.
And it could happen anytime with no warning.
Yeah, and it's ironic, Bill, because back in 2021, around the same time of the year, there's the silver squeeze movement, and that failed. And I think it failed because it was a movement like by retail, like people like me.
Little guys.
Yeah, the small guys. But now, this time, it seems to be sovereign governments doing it. They want the silver, and I think the COMEX and the LBMA manipulators they didn't see that coming, and so yeah, I agree with Gary Bohm as well.
Yeah, it's the silver, the squeeze 4 or 5 years ago. Like you said, that was retail investors mostly. Um, all you got to do is just look back a couple of weeks ago, and Elon Musk made the comment "not good" on X regarding China basically shutting down their silver exports at a time when COMEX and LBMA are experiencing shortages, and all you have to do is look at the math. The amount of silver available, they could be gone through in a day with just one or couple big orders. I mean, very big orders, but understand that type of money is out there in multiples.
Yeah, and Jim Sinclair, your old partner. He said, and because I've spoken to, I don't know if you know Peter Carlin. He wrote a pocketbook of gold
Yeah,
with Jim Sinclair,
sure.
and he said that Jim
Yep.
thought that in the next big bull market of gold and silver, that we wouldn't see the price come down like it did after 1980, and that it would be
Correct.
completely different. Is that how you see it, and how are you? Positioning yourself with your physical gold and silver? And are you also involved in the miners? If you could cover those uh, uh, 2 points or 3 points.
Sure. Yeah, Jim believed that the final episode, and that's what we're in now, gold and silver would reset to higher numbers and not come back down like they did in 1980 and 2011. Uh, one of his one of the things he used to say, and I believe it's correct now today, that this is the rally you don't sell. This is the rally you don't try to trade. The reason being, we're going to wake up one day and, like you just talked about, there's not going to be any metal available to buy. So if you had sold and taken a profit, where are you? You're sitting in Federal Reserve notes without the ability to get back into silver or gold. So this is the rally you don't sell. As far as positioning of gold and silver, I mean, I've recommended now for probably 10 years because of the gold to silver ratio that people be at least 70% silver and only 30% gold. And I told people I don't have a problem if you go 100% silver because the idea is when the ratio comes down, then you swap some silver for gold and you'll end up with more gold ounces than if you just bought them outright. And we're actually at the threshold. My recommendation has been at 50 to 1, you figure out how much gold you want versus silver. And let's say that you decide on an 80-20 mix. Figure out how much that is in relation to your position and swap a quarter at 50 to 1. Swap another quarter at 40 to 1, another quarter at 30 to 1, and then the last one just follow your gut. So you'll end up with more gold ounces than you would have if you bought them outright. Uh, as far as mining concerns, yes, I've plenty of different miners, but with the caveat, I hold those certificates because when the great taking comes, if you got money with a broker, you're gonna lose it. So make sure you get your stock certificates. And the one company that I had been and involved with since 2015 was Jim's company TRX Gold. That's a mining operation in Tanzania. They basically bootstrapped uh, building building infrastructure. They bootstrapped that from cash flow, and they'll be producing somewhere around 60,000 ounces, gold ounces per year. That's going to give them tremendous cash flow. And that cash flow, I mean, I've had many discussions with management. They're on the same page as I am. They want to use a lot of that cash flow to drill because in the last 18 months, they've found two new gold bearing zones with the same markers, if you will, that Buckreef has. So they're going to be drilling the two new zones, Anfield and Stamford Bridge. And that's the reason I originally got into the company, not for production, not because Jim was talking about trying to do dividends in gold. I'm a land man. I'm a land person. After looking at the geologicals on it, there's I believed, and this was, and when I first looked at it, they had a proven 600,000 ounces. Now it's 2 million or 2.1 million ounces, and with these two other zones and the higher prices, which brings more gold into the proven category, this has got to be, in my opinion, it's got to be an absolute minimum 5 million ounces. That's why I own such a big position in TRX is because of the land. And as it stands right now, gold in the ground is valued at basically nothing. But if you go back to 1980, go back into the 1990s, mining companies were valued based on what they had in the ground. And that's going to happen again. And when that happens, that will be our ultimate payday.
Yeah, and any idea, because I've followed TRX for a long time, and I did have the stock, but I don't right now. Any idea when it's actually going to start getting the gold out of the ground?
They already are. By this time next year, they'll be producing 60,000 ounces per year. Do
No.
that math.
Yeah, no, that's very good. That's very good.
That's like a quarter of $1 billion in cash flow.
Yeah, yeah, no, that's great. Um, I just wanted to move over now to a topic that's been been a big debate, and I've been on the hyperinflation debate, and a lot of people have been on the deflation debate. How do you see the end game?
They're both right.
They're both right, yeah. I guess
They're both right.
in terms of
Yeah, we're
gold,
going to have hyperinflation.
Yeah.
We're going to have hyperinflation in dollar terms, and we're already having massive deflation in gold and silver terms.
Yeah, no, I agree. Yeah. And Jim always used to say
It
that,
depends. I
sorry.
was just going to say it all depends on what you use as your measuring stick.
Yeah, and I've been noticing that, Bill, because uh I was looking at a car and the same equivalent car 20 years ago cost like 300 ounces of gold and now it only costs 30. So that to me is a deflation.
There
But
you have it.
yeah, yeah, yeah.
But it
So
costs more in dollars.
yeah, a lot more in dollars, yeah. And I think
There's your
that's what,
inflation.
yeah, I think that's one of the big mistakes people are making, major, investors and the general public and the mainstream is that they're looking at the stock market. They're looking, here in the UK, they're saying, oh, the FTSE broke 10,000, but they're not measuring it versus uh, gold or silver that have been measuring sticks for thousands of years. And I think they're going to lose out massively if they don't have a little bit of gold and silver.
Yeah, I've written, I mean, I could go back and I'm sure dig some stuff up from 2007 when I first started writing regarding this question of inflation versus deflation. And my standard answer has been we're going to have, and it's proven out, we're going to have inflation of the things you need and deflation of the things you have if you don't have gold and silver. Your assets will deflate while your cost to live will inflate.
Yeah, I mean it's typical of what happens in third world countries. I don't know if you know, I was born and I grew up in Brazil, and the general public had a really tough time because all the things you needed, like food,
Right,
shelter, and energy, was really unaffordable with the local currency. But the people
right.
who were at the top and had access to dollars, they did very well. So yeah, I can see that it's already happening. I think not just here in the UK, but in the US. Even President Trump is concerned about the
Right.
affordability crisis, which is really a currency
Yeah,
debasement crisis, right?
pretty much.
Yeah. So yeah, we're gonna wrap up now, Bill, and just wanted to ask you, what do you think? Are the most important things that the average person should do in these uncertain times and in a period where the dollar is going down the drain and that's very serious because the rest of the world, all the other currencies as well, are a derivative of the dollar.
Yeah, I think you need to have the mindset that you need to protect yourself because no one else is going to do it for you. That means getting yourself right uh, spiritually, physically, mentally, financially. Uh, have the mindset that you've got to do things yourself because if you dial 911, at some point, no one's going to answer. So, what's the checklist of what you need to survive? And go through that and we're talking about food, water, energy. Do you have the ability to clean water? Do you have anything that can produce any electricity if the grid goes down or uh, your utility goes out of business or whatever? I mean, the whole system is going to come down. You're going to be on your own, and we don't have the skills collectively that we had 100 years ago. 100 years ago, everybody had a garden. People grew a lot of their own food. That's not the case today. I mean, people don't even go to the store once a week to buy food. They go every day or every other day to get just what they want for that day. That lifestyle is going to completely change. You also need to think about how are you going to protect your position. If you're in a city, you can't do it. If you're in a city, I would advise find a place out that's rural and move. I know a lot of people can't just do that. But understand if you're in a city, you're amongst a lot of people, and a lot of those people are going to be hungry. If you've got food, they're going to take your food. Um, on my website, there's an icon up top called Grizzly's Corner, and that's been written and put together by I call it Grizzly's Corner as the guy who writes it. I call him Grizzly Adams. He's of that mindset, can go up in the mountains with mules for 6 months at a time and come out no problem. There's some great written articles in there. There's a lot of links to products that he's used. So go to Grizzly's Corner. Yeah, there you go. Right up top,
Yeah.
and you got to go all the way to the top.
Uh, I'm clicking here. Hold on. Is it? Yeah, I don't know why it's not, but I'm going to put a link to your website below in the description, and people can look into it.
Yeah, I didn't. It should be right up at the very top,
Let me bring it
and
back.
it says Grizzly's Corner.
Yeah, no, I can see it
No, that's
here.
all right. They'll find it.
It's up
It's right
here.
up top.
Yeah, Grizzly's Corner right here. Yeah. Okay, I didn't